Monday morning, folks, and welcome to another episode of the Film at Mondays podcast. Let's quickly dive into the technical outlook for US spot gold this week. This is the daily chart for US spot gold. We're reviewing last week's events, right from this green candlestick on 2nd of June, Monday, all the way to this red candlestick on Friday, the 6th of June. What's very observable when we start off on Monday was this large green candlestick. Gold started last week on a high, edging $92 higher. It broke above this descending blue trend line that you see here. It also broke above this blue ascending trend line that you see here. So on two trend lines, there was an ascent right up over here. What we expected from this is that gold would then climb up and attack this 3390 resistance here, where gold has been trading below for quite some time. But it just did not get the momentum to do so. Many market participants are on the fence because there are conflicting forces in the market with respect to whether gold will rise or whether gold will fall. And so from Tuesday onwards, you saw markets consolidate largely. And then on Friday, after the non-farm payrolls numbers showed that the US market is still very strong the US labor market is still very strong, both from an NFP standpoint and the unemployment rate itself. The unemployment rate came in exactly in matching the forecast of 4.2%. Because of these readings, it was clear that the Fed has more leeway to delay its interest rate cycle. And that is why you saw gold correct and come down all the way to weekly lows of about 3309 on Friday. Looking into next week, on the weekend, we have seen some developments in the Russia-Ukraine war. There have been major escalations and the war has intensified over the weekend. You are going to see gold respond to this from a safe haven perspective. Gold might probably climb back to 3370 levels like it did last week, just on safe haven grounds. But technically, there are concerns about gold's uptrend once, let's say, the safe haven demand falls off. On the weekly chart, you see gold has formed a candlestick, a shooting star candlestick pattern. This is typically indicative of declining bullish momentum, where it's not able to sustain the highs that it's able to hit. And as a result of that, you see massive bearish pressure, where even though it opened and remained at these highs, it kind of has closed much lower. So this is a worrying sign from a gold bull's perspective. Technically, on Wednesday, we have the core inflation rate, which is the CPI inflation data release. We're expecting month over month inflation to remain consistent at 0.2%, similar to the previous reading of 0.2%. On a year over year basis, we expect inflation to rise to 2.5% as compared to 2.3%. So there are signs that even the estimates are showing signs of increasing inflation, and disinflation is not on par or on track with how the Fed was expecting it to be. This makes the following week's FOMC meeting much more interesting. On June 18, which is the week following next, we have the Fed's interest rate decisions, where it's going to tell us about what it perceives interest rates to look like for the remainder of the year and also for the years going forward. And if you look at the CME Fed Watch tool, which gives us the probabilities of interest rate cuts, we expect the first interest rate cut to be effective from the month of September. So this is a change that we've noticed from the last time we covered this. For the next two meetings, which is in June and July, we expect the interest rates to remain largely consistent with the current rates, which is between 4.25 to 4.5 basis points. But it's in the September meeting that we expect interest rates, the first interest rate to be cut and followed by the October meeting. So this is something that we're going to keep an eye on, as this would directly impact and boost gold's prospects into climbing and breaking those 3,400 and 3,500 levels that it has been struggling to hit. Thank you for tuning in into understanding the technical outlook. If you have any questions, please feel free to add it in the comments. Thank you and goodbye.